All right. Hello, everybody. Welcome back to another episode of Tech Bros Weekly. We've got a lot of stuff to talk about today. Robinhood, obviously, first priority. Stock was up 4%. We have some theories on why the stock was up. We'll probably talk about some stuff that happened with NVIDIA, some stuff about the macro, but excited to be here. Tanner, Roy, how are you?
Doing great. Near all-time highs on several important tickers, on the S&P 500, on Bitcoin. What's not to enjoy?
Yeah, there you go.
Things are well. Markets are fun again, and especially Robinhood, which I know that this is a Tech Bros Weekly, but I think we probably are going to talk a lot about Robinhood not only this week but probably every week. So, very exciting that they're up essentially double in like the last 5 weeks.
Yeah, it's pretty incredible. Big day. I didn't expect 4% on the day. Bitcoin helped, but I think there's some other headlines that after hours I came to a conclusion of, hey, maybe this is actually the reason why the street or retail, whoever it was, ended up buying some Robinhood. So we'll get through the Robinhood news today, and then we'll get into some other tech topics. But here's the first stat I want to introduce to you guys. I don't think Tanner and Roy have seen this stat. This broke after hours from JP Morgan, and it's kind of making me think this is why Robinhood was up today. Retail investors bought the Moody's dip, if you want to call it a dip, in record numbers, surpassing April volumes. April is when, after Liberation Day, retail really bought the dip. $4.1 billion of stock was bought via retail. This is based on JP Morgan's data within the first 3 hours, 9:30 to 12:30 Eastern on the market open. Palantir got $439 million of inflows. Tesla got $675 million. They were the single two biggest stocks that got inflows today. And overall single stocks were $2.5 billion of the purchases, while ETFs comprised $1.5 billion. I didn't understand why Robinhood was up 4% after this stat. I think either some hedge funds or some money managers kind of saw the retail momentum because they have access to this data before all of us. And we're like, holy crap, we got to buy Hood because this is obviously retail buying the dip. So Roy, give me your raw reaction to if you think this is the reason why Hood was up today. And then in general, what do you think about retail buying the dip?
I think it's probably more Bitcoin, to be honest with you.
Yeah.
But that said, like, this certainly contributes. Robinhood is continuing to capture a larger and larger market share, and not just through the Moody dip, but all the way through this dip. Retail has been heavy buyers, and institutions have not necessarily been. And so I love it when retail wins, and a lot of that retail volume does come on Robinhood. So it's good for the company, good for retail. And I think that it's just a matter of time, I hope, when we see this that we looked at, I think last week, this gap between performance on Robinhood for users versus the S&P 500. I think we might see some of this here at some point in the future with a lot of this dip buying having been accomplished. So hope that's the case. Yeah.
Tanner, your reaction to retail buying the Moody's dip?
Yeah, I mean, I was surprised that it wasn't everyone. I definitely didn't care about it. I think that it's a overreaction, but I did actually think specifically for Robinhood that it was more crypto based. It's not just Bitcoin, but Ethereum also climbed quite heavily over the last couple days, and these sort of things are, really exciting to see. So in the past 24 hours, we're seeing a lot of crypto activity. That's probably pretty exciting for Robinhood.
Yeah, I agree. I kind of disagree that it was Bitcoin because like Bitcoin had a good move, but it was flat the majority of the day. It's kind of breaking out a little bit towards the end of the day. I don't know. Robinhood doesn't usually move 4% on a 2% move on Bitcoin. And if it had, it would have, surpassed all-time highs when Bitcoin went to 107 over the weekend. So I don't know. Maybe it is definitely some of it is Bitcoin. But I kind of think the hedge funds were looking at the retail inflows, and they were like, dude, retail's buying. Like, we should get exposure to benefit off retail's volatility. And maybe that's Robinhood here.
Sure. Yeah.
Yeah, I mean, it all contributes. The bottom line is like people look at Robinhood as just an equity play or just a crypto play or just a U.S. play, and it's diversifying. It just is. It has, and it's a very strong company. So on days when the market's green and crypto is green, I mean, it's just a good thing. We had, I think, 6 straight days of the S&P 500 being green in a row. First time since actually August. So this is actually really exciting. It feels like that we may be nearing. We'll probably get a pullback first, but like an all-time high in the S&P 500 is very possible fairly soon. And I didn't think it was going to rebound that fast. And I know the all-time high is $85 on Robinhood, but doesn't it feel like that's just going to happen this year? It might not, but man, I'd be a little bit surprised at this point.
Go ahead, Tanner.
I was going to say, do you guys think that potential S&P 500 inclusion is still on the table for this year?
Yeah.
Yes.
I mean, if it doesn't happen, I'm calling up Williams Sonoma's marketing department and figuring out how much they bribed.
Yeah.
Like,
so what percentage of the? I mean, I'm under the anticipation that this is a lot of crypto moves. Like if we look at Robinhood and look at Bitcoin over the last 5 weeks or so, they look like, I don't know, quite similar. Obviously, there's a little bit of a multiple to Robinhood as it moves, but you know, I like that comparison. I always find that whenever Robinhood's up, I usually have to look over and be like, oh, yeah, okay, yeah. Crypto, of course, is up. But with the S&P 500 also, you know, probably happening this year as well, I just think that investors are excited about that additional exposure. And it's a pretty easy bet to make that they're going to be one of the few companies on that potential list.
Yeah, I need to do a preview before next month for when they actually open it up, more than just that select company for Coinbase. But yeah, we talked about it last week that Coinbase getting in really signals, you know, acceptance towards crypto. And some people are like, oh, the master strategy to get it. It's not EPS profitable. They cannot. But Robinhood is a shoe-in unless there are very few companies exiting the S&P 500. I don't think that's the case. Usually 2 or 3 do each quarter. Fewer last time than this, or actually we had more last time, but it can vary. Or if it's very sector specific and they say, hey, there's too many financials and there's just not room for another one for whatever reason. But I feel like it's inevitable. It should be soon. I think Coinbase signals that. We'll see. There's a lot of other worthy companies out there too. And it's honestly like, it's one of those things, it's just a cherry on top. Like, this is not for any of the three of us, I don't believe, correct me if wrong, that this is like the investment thesis is it's going to get in the S&P 500. All right, it'll gain like 5 to 8%. This is awesome. No, it's nice.
No, but to an extremely volatile company, it does add a nice little base, you know?
Yeah.
Oh, yeah.
It adds a base of investors that won't buy or sell for any particular reason.
I just don't like that William Sonoma is in the S&P 500 and Robinhood. I don't like that. I really have an issue.
You clearly don't have a Juro or whatever they're called. The one that Steve was freaking out about.
Like, that doesn't make any sense to me, dude. The level of innovation we've seen from Hood, the transformation, stock went from 8 to 60. You're putting William Sonoma. Like, I think we need the top 500 companies in America, by the way. William Sonoma.
Yeah. No, like if this time like the trade desk gets in or something, I'm not going to be mad. But
I would be fine if trade desk went in, but they picked William Sonoma.
Yeah.
That's my issue. Now, here's another reason. Here's another reason Robinhood went up, and this might be the actual reason as well. They submitted a 9-page letter to the SEC. I'll put it in the chat for WRA tokenization, real world asset tokenization. And the summary of the letter is they were asking for regulatory frameworks from the feds, not on a state level, but on a federal level. They want broker dealers to freely custody and trade tokenized assets. They want to treat tokens like underlying assets, and they want 24/7 trading with instant settlement. Again, that was sent today, and this is a copy of the letter. Do we think we're getting tokenization way sooner than what we thought?
I would be skeptical just because it involves the government. They're accelerating, especially as it relates to tokenization and crypto, and that is a big part of the initiative. I think maybe possibly this could happen next year. It still feels kind of early. This year it feels very unlikely, but I could be wrong. This is one of those things though that helps lay that foundation, that gets people to talk, gets people to consider, gets pushback, revision. It's one of those processes that happen over time, and it would be a great thing if it does, but it just feels a little bit early. And I don't mind Robinhood at all pushing the envelope here, but the key thing is they're pushing the envelope as far as writing these sort of things, getting it out there, doing interviews, writing articles for newspapers as well, talking about it, of course, in earnings calls, and I'm sure at that crypto summit that they had. but they're not like launching things illegally before they can.
Yeah, I think last week, whenever we spoke about this, I said that this was going to take a really long time. And by the way, this is my first time seeing this, so so I haven't gone through it. But one of the reasons why I said that this was going to take a really long time is because they really haven't even been in the discussion with government. So obviously, they're not going to fully build out a platform and then start going to regulators and saying, "Hey, time to start doing this." So the fact that they're starting to reach out does make me think that this is potentially closer, or they do really feel like it's time that this is re-looked at. I think that that's very exciting. But like I said, I haven't read about it, so I don't know some of the the highlights or if someone's put that together yet.
Yeah, I mean, well, so Josh posted it today, and I thought it was really cool, dude. I'm on record saying I think this is a couple years away. I don't know if it's coming up sooner than in a couple of years. Obviously, they need to get regulatory clearance, but part of the reason why I think Vlad was happy to give $2 million to the Trump organization is because they got the right SEC chair to make this happen, right? Paul Atkins. So if there was any administration where they could tokenize real estate or stocks or whatever on the blockchain, it would be this administration. So if it doesn't happen in the next 4 years, I don't know when it's going to happen, but I think it will happen soon. There was some news last week that JP Morgan also began some level of tokenization on their own blockchain that they've been developing. I think some people saw that headline. So I think it's coming pretty soon. Question is end of the year or next year. If I had to bet, I would say next year, but it's going to be really exciting to see what they introduce in France as well as part of the crypto event.
So Amit, my question is, will we see this tokenization, or will we see your tokenization with an L, JRR token, you actually watching Lord of the Rings extended cut preferably, or reading the books? Which is going to happen first?
Tokenization is great. Can we talk movies just real, like, for 5 seconds?
Was it Frozen?
You were frozen.
Yeah, it was Frozen. I didn't hear you. I thought you were ignoring me.
No, it was Frozen. No, dude, it's a long movie, bro. It's hard to say there and watch. It's just a long movie. I did watch Terminator over the weekend though, so
you got through it.
Yeah,
I saw your movie thing. Now I'm a big movie guy, so I was in your chat like putting like 1,000 things in for you to watch. But I actually scratched off a big movie off my list this weekend as well. Schindler's List.
Oh wow!
And boy, oh boy, was it freaking fantastic!
That's regarded as like one of the top 5 movies of all time, to be honest.
Yeah.
While we're still on movies, and this will not be about movies for very long. You've seen The Princess Bride, right, Amit?
No, I've heard of it though.
My goodness. Okay, watch that. If you can't get through that movie, I can't help you. I don't know. Lord of the Rings, even better, but like Princess Bride has aged well. I'll just say that.
All right, dude. I'm upgrading the movie catalog, so I'll figure it out. Okay, cool. So those were the two kind of core Robinhood pieces of news: the tokenization stuff they submitted to the SEC, and then the retail buying the dip. Coinbase, let's talk about them. They got into the S&P 500, and then they announced that they got hacked pretty badly. Roy, your take on what happened with Coinbase?
So they got hacked, and then they waited and waited and waited and waited, got in the S&P 500, and then said, oh, by the way, this hack happened. And your data has been leaked. This is one of the reasons why a lot of people got spam and spam bots, and there's a lot of different type of scammers trying to get after them, basically saying that they need to log into Coinbase, which was not Coinbase. Unless, and correct me if wrong, unless, basically, I know there's an investigation that was going on, but unless the investigators basically commanded Coinbase to not say, hey, we've been hacked, so that they could trace those people down, I think it's just flat out wrong to not come out and say, hey, we've been hacked. This is what's happened. We've sealed the breach. Log on to here for details. We're going to make sure this doesn't happen again, but we want you guys as a consumer to be aware. And that way people are not falling victim to scams left and right as people are reaching out to them, which I'm sure some people did, and they probably have a lawsuit on their hands against Coinbase, frankly. These things happen, but just the time delay between when it actually happened, and especially the scope, and when it was announced is just wrong. Now, I did like what Brian Armstrong, the CEO of Coinbase, had said, but I also think that this could be, it's not going to kill Coinbase. It might slow them down temporarily, not for long. They're going to be around a long term. And I'm also wondering if this gives tailwinds as far as Robinhood's crypto platform.
I saw you post about it. I think that Coinbase is so global that even some people that are affected that are PO'd don't even have the option to move. And really, the main company that might benefit from this is more on the lines of Binance than it is, Robinhood, for example. But potentially there is some. I can't see it being a bad thing for Robinhood.
Yeah. Well, I mean, you have to remember that their wallet is a lot of different places, so people can buy it even outside of Europe and the United States. So they are a much larger player as far as crypto, as far as their global reach, than they were a year ago.
Well, can we talk about the Wonderfi thing?
Did we not talk? No, we talked about that last week, but
I don't think so.
Yeah, it was on a Monday, bro. We talked about it. Wait, did we?
I don't think so, because I had a lot of thoughts that not a lot of people brought up, and I don't remember discussing this with you guys.
Okay, so we did miss this. Okay, well, that was because it was after Monday. All right, so Robinhood bought a company in Canada, Wonderfi, crypto derivatives company. I'll pull it up. But Tanner, what were your thoughts on that?
Well, overall, I thought, okay, a deepening into cryptocurrency. There's also a couple interesting features with Wonderfi that excited me. Them going to Australia. And also, did you guys notice, I pulled up an old article from April of 2024 that Wonderfi had acquired a large book of business from Bitstamp. They purchased their Canadian clients away from Bitstamp, 110,000 users.
Wow.
And I wonder if that was the connection that Vlad saw and was like, hey, why don't we just buy this company as well? But then Vlad went on X and he, under Roy's tweet, I actually think, and he said, hey, Tanner, you were asking when Canada, this is maybe your answer, right? What he was alluding to. But Robinhood crypto wallet is already available in Canada. So what is this? Is he alluding to the fact that they also are going after regulatory approval for equities and all of these things? Because that Wonderfi is also trying to do that. They're trying to step away from crypto and get into all different, they said equities, commodities, foreign exchange, and all these things that they're trying to get regulatory approval for. So I wonder if this is actually more than just a crypto acquisition, but curious your thoughts.
Some of these acquisitions, like they're certainly about assets under custody, technology, that sort of thing, but a lot of it is regulatory approval. That is meaningful because some of these things take a long time, especially in Canada. So depending on how far in that process Wonderfi is, that's certainly possible. It could accelerate their timeline immensely.
So Wonderfi doesn't sell stocks. They do crypto options. They spent $180 million to acquire $1.4 billion in AUC, which they're very good at. I don't know if it's necessarily undervalued, but I mean, with Bitstamp, they spent $250 million. They got like $4 billion in AUC. So seems like that's good for their AUC.
I think it's more than that, by the way, but
no, it's 2.1 billion Canadian AUC.
Oh, sorry. You were okay. Gotcha.
Yeah, 1.4. Yeah. So I think the thing here is like, I don't know if they are really that interested in the business of Wonderfi, but more so getting some level of an established presence in Canada, because starting your own crypto brokerage, whatever presence, seems to be a bit more harder just given the regulatory issues. I really know nothing about Wonderfi. I don't know if the business is good and if they get a ton of money off the derivative contracts on Bitcoin and crypto and stuff, but it seems like they already have a headquarters in Toronto to an extent in Canada, and now they have a presence with Wonderfi. So I think it's bullish, but I know nothing about Wonderfi's business. I'm just happy they're finally in Canada. And eventually I think it's going to go into stocks, and this is maybe going to make the transition easier, but that might take some more time as well.
If you want to share my screen, this is from their last deck. While they were still a public company, talking about some of their performances, the different companies that they own and operate. There's a few things like the corporate client stuff like this, which I think might integrate well with Bitstamp once we own it as well, which I thought was interesting. a potential operation in Australia.
I don't know.
Maybe interesting. They do, like I said, have aspirations to get into more than just crypto. So this is from their slide deck from their latest quarter. And then they also have this business, which I actually think will most likely be sold or just offloaded or completely let to run independently. But it's just for businesses to be able to accept crypto payments. I don't think Robinhood will have anything to do with this, but yeah.
Bullish, dude. They keep expanding. They keep finding a way to not stop the momentum.
One of the best parts too is like if you look at their cash pile, they've ramped up marketing, they have ramped up acquisitions, and the cash pile isn't just burning away. They print cash and they're deploying it, I think, at the right amount of aggressiveness, not like saying, hey, we're going to just have no money left. And they're also not just sitting on the cash doing nothing. It's just like for me, it's in the sweet spot. So
what's so weird is every acquisition has been roughly about the same price.
Yeah.
It's so weird. Like they don't like buying like tiny companies. They don't like buying big companies. They're all around 200 million.
Yeah. Which in the scope of what Warren Buffett does, it's like, it's nothing.
Yeah, no, they are generally tiny. I don't mean that they're not tiny. That like 200 million is tiny for Robinhood, but there's no like 50 millions or something. Like, I don't know. It's just interesting. We also had this news as well. If you guys wanted to talk about this, we already got most of the numbers, but there was an official April report.
Dude, why do I feel, hold on. Yeah, you're right. It did come out on Tuesday. We didn't talk about this. Yeah, you're right. All right. So options, 168 million, all-time highs, net deposits, second all-time highs of 6.5 billion. Crypto went down. That was reasonable. Margin book went down. People deleveraged. Equities all-time high by a wide margin, 158. I mean, May has been going well, just anecdotally, all of us can see. April crushed it outside of crypto. I mean, feels like Q2 is going to be another 50%, at least 30%, if not 45 to 50% growth quarter.
One thing that I actually found the margin book really impressive. I know people look at that and they're like, oh, it decreased, so it stinks. But IBKR, it was either 10 or 11% that they went down in April for their margin book. And I looked at a couple of other brokerages as well, and they went down actually a bit further on the margin book. And it just seems for whatever reason on the Robinhood side, they're like, nope, margin, maybe it's the rates, maybe they're just not as over leveraged and so they weren't liquidated. I'm not sure, but for whatever reason, they've accelerated faster than their competition on the margin book. So
I wanted to show this off as well because I think as a visualizer, it's powerful. Just really quick, whenever you take a look at this, equities is at an all-time high, options is at an all-time high, and then crypto is not. So 66% is doing well. 1/3, who cares? But if you actually multiply this out through the quarter and you take a look at what their transaction revenue does whenever you actually look at this, and this is, by the way, including an increase in crypto take rate, by the way, is that I think 0.58. Mm-hmm. Crypto is very important to Robinhood's business on transactional revenue. Yeah. So what are your guys' thoughts there? Do you think that this is still worthy to pump to new highs? Or is crypto going to need to show a real turnaround here? Or are investors even worried about that at all?
So I think some context is needed here. And this is crypto volume in general. And so we see, April was quite low. And then we finally get towards the end of April. And there are a couple of days in May that are weaker and softer. But we're actually back here in not all-time high record volumes, but in very good, solid, respectable volumes. We saw what they did in February. Again, the take rate is higher. You zoom out, it continues to accelerate. You zoom out further, it's accelerating more. Zoom out more. And even in the bull cycle previously, it was nothing. So long-term, this is a trajectory of crypto. Is Robinhood going to have a larger or a smaller piece as a scale? I think larger, even though is more competition basically all the time. Winter will actually kill out some of that competition anyway. They have shown prone to now twice acquire recently a couple of other crypto competitors, kind of competitors anyway. So yeah, they're going to be perfectly fine. And the great thing about Robinhood is like this is not just a play about a quarter. There's going to be up quarters. There's going to be down quarters. Crypto is a considerable part of the thesis here. But I also think that that's why it pumped by 4% today. It's just like we're right there near the all-time highs of Bitcoin. It doesn't always happen this way, but usually when you make a new all-time high of Bitcoin, it doesn't just say, okay, yeah, we made a new all-time high by $10. Now we're going to go back to 80,000. And the longer this cycle plays out, the more and more people will pile in. Like Jamie Dimon has actually been bullish on Bitcoin for a while, but this is one of those things that caught my eye over the weekend is, his comments went from basically saying, oh, this was like 3 or 4 years ago, that any JP Morgan employee that was caught trading Bitcoin, that they were done, they were fired. And now they're like, well, actually, Bitcoin's pretty amazing. So you're seeing a lot of, states as also apply for not regulatory license, but having that reserve in Bitcoin. Countries will join this as well. United States has shown some interest in this too. It's not just all about Bitcoin, but that's like the gold standard that really fuels this whole market. So I don't know. I'm very optimistic that perhaps this cycle is going to be elongated, and the longer it is elongated, the better it is for Robinhood. And I think that they do deserve to be trading at this multiple, even so, though some people will disagree. But anything could happen. It could crash. Bitcoin is volatile. It could crash down to like 50,000, in the next week, or it could go 150,000. Volatility is pretty good. Downside is a lot less good, though.
Can we talk about market share really quick in Robinhood? Because while we talk about volatility being higher or lower, CoinGecko posts the daily total crypto volume. I found the centralized exchange volume, so that's the ones that Robinhood competes in. I just want to show you guys this, and then you guys tell me your thoughts. Here. And I can try to make the bars bigger or smaller, depending on... I think you guys can view it. Anyway, in the orange here is the percentage of total centralized exchange volume that Robinhood has based on total quarterly market volume.
Wait, how do they calculate Robinhood's market share against...
I'm calculating it based on the amount that we know that they've traded in each quarter versus how much has been traded in a quarter.
So you're taking the average amount of market share they have historically and applying it to right now.
No, this is each quarter, Q1, Q4, Q2. So we know all their trading volume, right? So where is it?
But I'm saying you don't know Q1 yet. So how are you getting the number?
We're in Q2 today.
Oh, sorry. You're right.
I was like, there's no assumptions made in here. This is just like pure data.
Yeah.
So yeah, we don't know Q2. I'm not making assumptions for Q2.
Okay, so we have basically, if we just round up, 1% of the entire crypto traded volume market share. Yeah,
and this is not United States. This is globally. For centralized exchanges.
If we can get that 1% to like 1.2, 1.5, which is not easy to do, but that is where you're saying there's a massive growth opportunity essentially.
Well, actually, if I give me a second, but I'll show you because I've compared it to Coinbase. We're closer than you'd think.
Really?
Yeah. I think last quarter, Robinhood was at, and this is a retail, by the way, not institutional. Retail, Coinbase was at 1.4, something like that. And Coinbase was at, here, I did this actually. We can take a look at both of these slides. I don't know how well they'll do on this, but I don't know if you can see this. The green is Robinhood, the blue is Coinbase. So Coinbase is higher. Let me try to just blow everything up here. But
dude, we are not that far behind.
Yeah, the only thing was the dip in market share. I understand a dip in total volume, but a dip in market share means that Robinhood traders are trading less than the average of Coinbase users.
Right.
Which might be normal, but then you also see these massive step ups, like 1.1% of the total market. Here, this lime green is hard to.
This actually makes sense because Coinbase's volumes in Q4 were 94 billion. Robinhood's were 70 billion. It's basically the same proportional distance away from the total market share.
You know, and then if you want to take a look at it this way, this is another way I like to look at it. If we just compare them to each other, like back in Q4 of 2021, Robinhood made up for about 20% of the volume versus Coinbase's 80%. In Q4, we did 43%. They did 57%. So, I mean, the overall trend is more and more towards Robinhood, which means Robinhood is growing faster than Coinbase. Anyone can see that in the numbers. But
hold on, I have a question. Why is Coinbase only 1.4% of the entire crypto market?
That is retail traded volume.
Oh, okay. But still, retail traded is the most amount of volumes.
No, it's not. So if you take a look here, Coinbase traded volume, it's heavily institutional.
But retail is where they get their margins.
Yes. So this is then my next slide. This is why I don't like Coinbase, is because their growth in institutional is crazy. 80% of total traded volume, yet 87% of their revenue comes from retail. So 80% is institutional and 87%. So the 20% makes up for 87% of the revenue. It means that the take rate on retail is so much higher than institutional.
Why is, like, does BlackRock just not want to pay?
They aren't paying those prices.
like screw this.
Especially Coinbase prices, but Robinhoods are climbing too.
Yeah, but this is the thing though, right? This is the interesting part, is that a company like Robinhood can come out of nowhere and say, hey, Coinbase, will you do transactions for us? And they say, yeah, absolutely. We'll charge you 0.03. And then they say, okay, great. They go to their customers and say, hey, do you want to buy crypto from us? We're going to charge you 0.5. And yet they could be doing it through Coinbase and offer much less than what Coinbase would charge on to their retail customer.
So scroll up, please, to the Coinbase versus Robinhood percent volume thing. I just want to highlight an interesting point there where you had the chart.
This one or this one?
That one right there. Yeah. So it's easier to see on Robinhood, but you see those spikes where it spiked from 0.58 to 0.84. And we see in of course, Q4 that it spiked to 1.10. These correspond, of course, to large moves in Bitcoin. And so when Bitcoin really moves up, it seems like on this chart, and I'll talk about why in just a second, that Robinhood actually captures more than their fair share of that. And I think what it comes down to, and this is one of those advantages that Robinhood has over Coinbase, is the flywheel effect. That there will be people that, of course, are part of Robinhood because they're trading stocks and options, that sort of thing. They maybe have not been in crypto for a while, haven't been interested, haven't been thinking about it. It's not their main thing. But then they see all their friends talking about Bitcoin or Dogecoin or Fartcoin or whatever, and they're flying up and they're like, okay, I'm going to go ahead and start trading some of this stuff. And so they're right there. It's already installed. It's top of mind. And boom. Now, the other thing that's very interesting in the pivot that Robinhood has done, they of course have the credit card, but a lot of people are on the backlog. But eventually, that will be another flywheel factor. But more significantly is the event contract space. They have people there that are on and using events contract that perhaps have never touched crypto at all. And event contracts, they were kind of smaller and niche last year. They tried Super Bowl, they got slapped down. And now, I'm getting announcements, not all the time, but I got one on like the NBA tournament. I don't know if it's the finals or not. I don't pay attention to NBA. But if you look through, there's all kinds of event contracts. I even traded one last week, not the sports stuff. And so I guarantee that as Bitcoin pumps, if it hits an all-time high, it starts getting more and more attention and traction, that there's going to be a lot more. We're going to see another one of these spikes where Robinhood's percent take rate is going to continue to increase as far as retail's participation during that pump, more significantly than Coinbase, because they have that flywheel effect that they continue to expand. And Coinbase just does not have that.
Yeah, there's a comment in the chat that I think is really interesting from Han Solo here. He said, Coinbase is more transparent about how much they take. Robinhood is sneaky AF.
I disagree.
Well, actually, I don't. I think that that's...
Well. Are you using the smart order routing feature, because then there's full transparency in how much they're taking. So the reason the reason he says Hood is sneaky is because, and I agreed with him in the past, if you buy Bitcoin at 63,957 and you submit the order, it'll execute at like 67,985, right? Some stupid $4,000 spread. But if you use the smart order routing, which you pay an extra 0.5% in the take rate, it gives you it literally exactly at the price it quotes you at. So if you pay 0.6% versus 0.58%.
I'm not actually. I think you're looking more at the back half of this comment. The Robinhood is sneaky. I don't agree with that part. I'm saying Coinbase is more transparent. Most definitely. Like, you're talking about using a very not only niche feature from Robinhood, but also a brand new one that's been around for 4 months or something. So for the years that Robinhood's been in crypto, it's been quote unquote commission free, and that's not been the case. So
I mean, it has been commission free. What are you talking about?
So they're getting money from nowhere.
No, they're making money on the spread, but the point is you don't pay the commission. That is 1,000%.
I get it, but people don't want to pay a spread.
That's irrelevant to the point of, is it commission free? It's, you're not paying to trade, even if you're paying on the spread. So there's no commission.
Sure, but I think the point that I'm trying to make, which is completely irrelevant to all that, which is, even whenever you look past the sneakiness, if you want to call them hidden, if you want to call a spread a hidden fee or whatever you want to call it, you're still getting a better deal than the company that's being super transparent and slapping a 1.5% take rate on you. And by the way, that's an averaged take rate. So with customers that are coming in through Coinbase, like the basic platform, not advanced, not the high, amounts of money that they're pouring through, you're getting charged 2%, potentially 3% on some of your Bitcoin purchases at really low dollar amounts. You're not seeing that on Robinhood. So sneaky or not, you're still saving money at Robinhood. That's the only point that I was trying to get past.
Yeah, no, I would agree with exactly what you said.
I mean, look at that, guys. We're within just a sneeze of the all-time high. It's pretty incredible over the last month. I mean,
I think Q2 is going to be good. I think the volumes are up there. Hopefully we get a good June, but Bitcoin's been doing well. To transition away from Bitcoin, can we talk about the two big guys on the street that added Robinhood? Tom Lee says Robinhood is a granny shot. Roy, I don't know if you saw this.
I did, yeah.
What do you think?
It's one of the few pieces of news I got in my little time away, but I was like, man, this is great. Tom Lee, people call him a promo bull. It's not quite true when he goes bearish. Listen, but granny shots is, he basically regards these as very, very easy plays, just like no brainer. And Robinhood, I know it's not at an all-time high. It feels like it just because that all-time high is more technical, just off the IPO during the middle of a hype storm. He's not at this point saying, oh, it's too expensive. I saw an article on that today. Like, you can't buy Robinhood here, good company, but it's just too much. You missed it. He's saying, no, it's easy money. I'm going and making this granny shot. So I loved it. And the more exposure you have from big time investors like this, I think the better. The people realize, because this happens all the time where people see a company and Robinhood has appreciated a lot since we've all been in. It's not super cheap anymore, but it doesn't mean that the play's over.
Yeah, I think this is good for two reasons. The actual allocation, I don't think. Oh, sorry, I'm trying to.
Yeah, I think it's like very low in the overall fund. It's not in the top 10 at all.
Yeah, but the actual allocation I don't care about, but he's almost like the new Cathie Wood in terms of retail following his every move.
Yeah.
That part's fine.
I mean, good Cathie. Like back when we're talking Cathie 2020, like in terms of everyone following her and making really good moves and being on top of it. He is definitely retail. Like, he's at the top. Dan Ives and Tom Lee are at the top of retail. List.
And they buy things that are not just pure hype. Like, he owns Progressive in the fund. Cathie, you would never buy insurance. So it's like, it's a little bit more reasonable as well, I think.
PayPal's a granny shot to him too, has been for a while.
There you go, PayPal. Yeah.
Yeah. So I'm happy it's on the list because it might also bring additional funding through some sort of retail index, if you will. I think that's fun.
Okay, so then the next big guy
which is the
Awesome.
best guy.
This dude, I could not tell you how happy I was when I saw this. I think it was Wednesday. Brad mother effing Gerstner puts his hat in the ring. $120 million of Robinhood. I think all of us look up to him. For those that don't know him, early NVIDIA, early Tesla, the guy, I would say, understands technology better than most people on the street. And he's in. So your reaction to Mr. Gerstner saying, I'm taking a bet on Vlad.
Huge. Love Brad. Like you said, we all have massive respect for him. He's really, really influential in the NVIDIA community, and just as a, early on, like Silicon Valley tech investor. Like, I don't know. I'm a big Brad Gerstner fan. So really, really excited to see that.
Yeah, what it signals to me too is like most of its focus is on tech, like pure tech, AI, the metaverse. Meta was one of those big investments for him, NVIDIA. So I think this also signals what type of play Robinhood is. Some people look at Robinhood, and I think it's just frankly the wrong way to look at it as, it's just a brokerage. It's a tech play because, you can look at where they were just 2 or even 3 years ago. Today, it's a very different company that's expanding their TAM. We were just at the San Francisco event not long ago. They're like, yeah, banking. We're going after banking. What else? Democratizing finance. There's a lot of finance, and we've seen them, or I've seen them go into areas where I never thought that they'd go into, which, like the betting market through the events contract. So like, it's part of finance. So I think that this legitimizes Robinhood as a tech trade rather than just a pure brokerage or financial.
Yeah, I agree. I think Gerstner has been interested in Robinhood for a while. He followed me last month on Twitter, but during 2024, he occasionally was liking some of my tweets about Hood when I was covering the company, when it was going from like 10 to 40. And I think he's always had his eye on them. He's been kind of watching what Vlad's been doing. He believes in financial literacy a lot. He has a lot of different initiatives within Congress to get more people invested into the markets. He sees the long-term vision of what it means to compound assets over time. This is a no-brainer. Like, this is a no-brainer for a platform that is built for retail investors, has the ability to truly democratize finance. And my mom sold covered calls today on Hood. Like, the fact that she netted premium from Hood as a retail investor, and she's 54 years old and has never sold a covered call before. Like, that is just, you need exceptional product experience for that to actually happen. And I think that's just going to keep growing more and more and more. And I also think he's thinking, as you said, Roy, they're a tech play because he doesn't invest in fintechs. He invests in tech companies. This is just the financial component towards it. I think it's one I'd be curious to see when he sells or if he actually holds this for the long run.
Yeah. What was fun today is I was in a random place, not talking about finance at all. A guy that I've known for a little over a year. Basically, the first thing that he says to me is, "Hey, hold on a second." Pulls up his phone, brings up the Robinhood ticker. And he's talked a little bit about Robinhood with me in the past, but he's like in his 60s. So like, people are getting it more and more. I think that when you have a Tombly, when you have a Gerstner that hop on board, people that have written off Robinhood, and I was one of those, back before 2023, I was like, yeah, this is a stupid company. Why I'd be after a brokerage? When I finally took the time to look, I got it. And I think a lot of people will say, okay, because of price appreciation, and you're seeing these big guys get in what seems to be too late. And they're obviously not thinking it's too late. They have a long-term horizon. Maybe I should give that a second look. So it's a good thing.
Someone said, big week for Tanner and Amit's mom, both learning options.
Well, your 145s for this week look pretty good, dude.
Yeah.
I think
I'm fine.
Did you sell a lot of covered calls or just a couple of them to learn?
Yeah, it's we're learning.
Okay, so it's obviously not your whole position. So even if it does go to 145, you'll be okay. But yeah, dude, how does it feel? You're netting premium for the stock staying within a range, and you're making money off your shares.
Yeah, sometimes you just got to pull the trigger, and then you'll feel a lot more comfortable with it. I think the second I actually sold the covered calls, I was like, yeah, this just makes sense. And I don't know why there was this weird, it was almost like anxiety behind it that was holding me back, which is from an investor standpoint is, I don't know. just negligence. I don't know. But yeah.
Well, I mean, there's nothing wrong with sticking with what you know, and there is some risk. It's not really, I think, severe risk, but there is some to selling options, but a lot less, I think, than buying it. And I was very hesitant at first too. 2021, I dipped my toes in, but 2022 in the bear market, I'm like, okay, this makes a lot of sense. So the only thing that I'll caution you, Tanner, and anybody else that's dabbling their toes in options for the first time is do not chase yield. Do not do that. You will just be like, oh, this company that I do not want to own has a great yield on the options. If I sell them, you're going to get burned doing that. Guaranteed. Stick with quality companies and strikes that you're comfortable with and go from there. And I'm sure you will.
Yeah, no, I don't think I'll ever chase that. I think a lot of it too is like I grew up just like following a lot of like big legendary investors that have always been like, hey, you know what? If people say, you know, times have changed, they haven't, and that's a good way to get burnt. And so like I've just learned a very basic way of investing, and then anything that changes or makes it a little bit more, I don't know, I just felt like, okay, well, there must be something to this, when really overall I'm going to do this with companies that I fully understand, and be happy knowing that the only downside is opportunity cost. And that's, I'm fine with that as well.
Well,
If there's no real risk other than potential gains, there's no risk at all.
I think this is really an important subject. Like, buying calls is very risky because the stock has to move in the right direction for you to get the premium and for it to multiply against what you paid for it. But selling calls, as you said, the only risk is opportunity cost. If you sell your shares at 145 and Nvidia goes to 160, you missed out on $15. But that's not a loss. And I'm so confused when people say you lost out. It's like, okay, I didn't buy Nvidia in 2003 either. I guess I lost out on all those gains. It's like, no, there's an opportunity cost of everything you do. But if the worst thing that could happen on a covered call is you make a profit, I'm like, okay, well, I don't really know necessarily how that's a loss. And then number two, I think there's a lot of taboo out there. Like even today when I posted my mom's screenshot of her collecting $1,400 in premium, there was a lot of these like miserable people in their life that are just like, why is your mom learning about options? Why is she doing this? And I'm like, first of all, she's not buying options. So like the risk of that, I could understand if she was buying options, the risk, but she's not, she's selling. And either you just don't know what a selling option is, or you just think all options are bad. Number two, why should someone in her mid 50s that's close to retirement not learn about a strategy that potentially could make them income in their retirement and they could compound their assets over? Like if I told my mom, oh, mom, you're not going to get it, she would slap the shit out of me, bro. She's like, my mom doesn't take that type of disrespect, bro. She'd be like, what? You don't think I can understand? Like she gets very disrespected when it comes to that stuff. And so she learned it on her own. She watched YouTube videos. She took the notes. She has a little notebook. She wrote down stuff. And then today she pulled the trigger. And so I just think the nerve of some people to be like, people shouldn't want to learn about this. Like, who are you to say that? The whole point of Robinhood is to give everyone access to the financial ecosystem that the hedge funds have access to. And that doesn't mean there's not risk involved, but that does mean that if you put in the time and effort, you can learn about it, which is not a bad thing at all.
And that's one of the things that frustrates me about those that, you know, not a bearish against a stock necessarily, but against a company that hate it. There's some people because of GameStop stuff, whatever. But there's some people that are like, oh, it's horrible for retail, this and that, and the other. And all they're doing is giving options, pun not intended, but it works, for retail participation to increase, especially in areas where retail is not involved in. And options was one of those. If you look at it 10 years ago, retail very rarely did options. Now you can argue that's bad. You can say that that's good. I think there's positives and negatives to it, but giving at least access to that and opportunity, I think, is a real win. And they've done that. I mean, like others have been involved, but retail involvement with options would not be where it's at without Robinhood. And going back to options in general, like selling, you know, covered calls, selling cash secured puts. What I really like about it are two things. One, I think I outperform myself when I sell covered calls versus not. But the other thing is it forces me to do what's extremely hard for me to do. And like buying the dip, no problem. But like selling when things are ripping and taking profits, that for a company that I had a long-term thesis in, I love that. I love that I'm forced to take profits. The one danger though is if you are selling covered calls and it blows past you, buying back your covered calls or rolling it out really, really far can be very painful. But like Hims is probably the most recent example here. Like it's absolutely ripped. And I sold covered calls, I think at 55. My shares were like $22 or something like that. And I was like, yeah, it's probably time. I'll get some yield, and it was just 25% of my shares at 55. And I'm like, hey, I'll take it. I've sold others as well, and I'm like, hey, if Hims wants to go to 95 this week, cool. Otherwise, I'll get a little bit of premium, and I have some at 80, and I have some at 75. If you're terrible at buying the dip, cash secured puts are a tool that can really aid you. If you like study and with a cool mind and cool head, you're like, hey, I would love to own more of this company at this price or get some money. Or if you're like me and you struggle with selling and taking profits, be careful, make sure it's a price that you're okay with, but sell that cash secured put, not cash secured put, covered call. Study up on it first, though, guys.
Yeah, that's essentially what Tevis even talked to me about as well. Like whenever I was selling Tesla, he's like, you'll just come to realize that just basically selling it is such a waste. You could have just sold like covered calls in the money and then just like collected premium to sell your shares, So I don't know. It's a new environment for me. Overall, though, I like the things that come with collateral. I don't have to anticipate any sort of gain or loss that is not expected. And from cash secured puts and everything, the only other underlying real risk is that I'm forced to potentially hold a company because I have to hold the collateral, and then bad things happen to that company while I'm holding it. But
then you get the premium from then the call goes to zero and you collect.
No, but I mean really bad. Like
yeah,
I mean like
it drops
pretty bad.
Yeah,
but honestly, it's not any. How is it different than if you just held the shares and then the bad news hits? Like the only difference is you
really
probably can't
long-dated, I
exit
guess.
that after hours or in the 24-hour
No,
market.
the only difference is he would have gotten out before the 50% drop or whatever. And if he was in the call, he would have been obligated to wait until it got to the price.
No, I see what Roy's saying. Like if it's really bad, then you're not going to catch the 5-minute 20% dip regardless. So
right.
And you can always, like, if you sold a covered call and you're like, man, I got to wait. You don't. You just buy back the covered call, and it's going to be worth pennies on the dollar, and then you get out of it.
Yep.
Like options are really neat as you continue to grow and understand them. Like vertical spreads are another one of those. That's fun. I have vertical spreads of Robinhood, and I didn't do this just because I was running low on liquidity and I didn't want to take more off the table. I wanted more cash at the time. But when I had bought those vertical spreads, one leg was depreciating much, much quicker, the $80 strike that I sold versus the 55. And I was like, man, if I had the liquidity in that account at that time and I was comfortable with my amount of cash, I would have just bought back that leg, and then they'd just be long calls that I owned much more cheaply than I would have otherwise. And that's the nice thing is you can go in and out, you can change strikes, you can roll them out. You have to get comfortable with them and then go slow. Like don't, when you wake up bleary-eyed the morning before caffeine, try to do anything, because I have done the wrong.
I've done that so many times.
Yeah. Where I'm like buying puts instead of calls, or instead of selling calls, I'm like buying and like, oh man, what am I doing? So it's been very small mistakes, and I've been more careful since then.
You know what's so funny is I've heard that from like almost everyone, and that scares the crap out of me.
Yeah.
I've never made a mistake like that while investing, but terrifies me.
I do think, and I'm starting to really dive deep into like the derivatives market in and of itself. And I've started like actually reading more academic literature, like actual studies that like institutions have done on the process of covered calls and puts and what it means to play the volatility. And there is just so much out there. A lot of this stuff is, if you just talk to ChatGPT, they give you all these articles and resources. And it is something that most stock market investors have no idea about. Like there's like investing that most of the world doesn't know about. And then there's selling calls and puts and vertical call debits that most people, it's like just enhancing that level of knowledge. Even if you're paper trading it, it is so unbelievably productive, because if you didn't sell Tesla, but you sold an option to sell Tesla, you would have collected even more from selling it. I've been in that situation many times where I should have sold a call instead of selling the stock. I would have collected way more, and it just maximizes your gains and your efficiencies as you're building a portfolio. So I think more and more people should learn about it. Retail should not be afraid about it. The idea that you are afraid of options to me is just a loser mentality. Like, don't be a loser.
Also,
why would you be afraid to learn about something when you're in the stock market anyway? It's just a different component of what you're learning about.
It's Greek.
Because it's Greek, yeah.
Yeah, which right now I have no real plan on learning. I'm sure I'll change and want to get more read on this right now or later on. But right now I'm just looking at companies that I know very well and picking way too safe of things, or where I think, okay, yeah, maybe it's achievable to get to that price, but it's not going to blow past that price where I'm going to not feel like, just rebuying it or something like this. Like even with NVIDIA 145s, I mean, yes, things can happen, but like people always should remind you, like it is a $3 trillion company. It's not going to blow past by May 23rd and get to 155 or 165. And then I'm like,
And even if it does, when you learn about all the academic parts of understanding how the history of covered calls work, it's like, unless it's a rocket ship going to 200, if you're 10 to 20% within your strike, you can navigate that position. You
right.
can roll it. There's so many, it doesn't have to be scary. Like 2024 messed up a lot of covered calls for people on Palantir, right? Because that thing just went up 4x. That is very rare. 2019, Tesla goes up 26x. Yeah, Roy experience. That is very rare. And so, like, in the majority of situations, if I buy Shopify at 95 and I sell a call at 120 for the end of the month, and it goes up to 115, I'm like, all right, I could have got some more premium, but it doesn't mean my shares get called away. And if it does, I can navigate it because it's probably going to come back below 120 because stocks don't just keep going up forever and ever and ever. They take some pit stops along the way.
Unless it's Palantir.
Yeah.
Unless it's Palantir. I sold 140s for Palantir last week for this Friday. They're up like 90% because I didn't think from 130 Palantir would get to 140. And if it does, it's a good problem to deal with. But that's like $1,100 for just sitting on my shares. Like, because someone wanted to pay me. Hims right now is paying $200 for a $90 45% move in 1 month, June 20th.
Yeah. And whenever I was a financial advisor, I used to talk to people who were getting late into investing, people who were older than me that were just starting. And there is this, like, once it clicked, once I was telling them about this, they'd get this. There's a particular person that I'm thinking about, almost like this dread of like, oh, wow, I've missed out so much because I didn't get started earlier. It's a little bit how I feel with options. I'm like, how did I sit here and hold on to these companies for low dividends or no dividend at all for just appreciation on the companies? Now, maybe I would have lost the shares by potentially putting too close to covered calls. I mean, that's a potential. But overall, now I just see a real long-term potential for just sitting on the stocks that I have forever.
Yep. Because you can rent out those stocks theoretically forever. Right?
Which I was planning on doing anyway, but now I see like a much higher return.
Correct.
The one thing you need to research, Tanner, before it happens to you, not during or after, is how to roll, what that means, how that works. And I do encourage you to at least, spend an hour or two learning the Greeks. Theta and Vega especially, you'll want to learn and focus on, spend some time there, just because it's going to better help you understand some of the risk. Delta is also useful, gamma, and with options too.
Okay, which ones do you want me to learn? Because now you're just saying them
anything
all.
but row. Don't forget row. Usually it doesn't matter. Usually
Delta and Theta, I think, are the most important ones. So.
Yeah,
but also, dude, ChatGPT. You give ChatGPT a scenario, bro, it will give you so many easy ways to understand how to navigate it. It is like with AI, no one should have an excuse on being afraid to learn. You don't need a YouTube course. You don't need to pay anybody for personal mentorship. It's AI. Just be like, hey, ChatGPT, what's a covered call? Give me 5 examples. Make them so simple that it's like a third grader could, and like, it's a game changer.
One thing that I also thought was really interesting, which I also realized that even writing covered calls is a skill, is I was talking with Tevis, who's gotten deep into this recently, and I told him about my strategy, and I think he held, well, I don't know if this is public or not, but he had enough shares of NVIDIA at least to do one covered call. I'll just say that. Like, you might have more, I don't know, but he was writing a covered call on NVIDIA. And he made something like triple the amount of premium that I made for something that I also thought was an equal amount of risk.
Mm-hmm.
But he just knew how to look
recently
for it.
He sold this call, or like a while ago?
Whenever I wrote it. I wrote it. Gotcha. I wrote it and then called him and I was like, hey, this is what I did. He goes, all right, I'm going to check the chains. And then he looked, he goes, oh, I found this one. And I was like, what?
But it was the same price, right? It was the same 145.
I think it was a little different. I don't remember exactly, but I just didn't want it to go over earnings, and I didn't want to, I was not ready to take a bunch of risk. I knew that 145 was way out, but like I was looking at 150. So you guys are like, but yeah, you can make a lot more depending on the slight changes.
Theta, if you're going to focus on one just as a seller, theta decay is probably the most significant. It's just time, how fast it decays. That's a beautiful thing about writing options generally. Again, there is a little bit of risk to it, just not much. But looking at that theta decay, if the stock stays flat, depending on what you did, of course, that option is that you sold is going to zero, and that's a beautiful thing. Time is on your side.
Yeah. Which I like watching the actual option and seeing the price change to potentially buy it back or whatever.
Because that person you sold the 145 to, they're stressing every day because it's not getting closer to 145. Whereas for you, you're not stressing because as long as it doesn't get above 140, it's a totally different mental paradigm to approach it.
Yeah, I even looked into the rolling and stuff. Even if I don't have a roll, I know to just be able to buy it back and then sell one for the equal amount that I bought it back for or more. So, yeah.
But yeah, definitely looking at rolling, like how to do it in your platform specifically as well, what it looks like. Do some hypotheticals. And that way, when you're in that crunch where it's Thursday and your stock just moved ridiculously and your call expires on Friday, you know what to do. Or you can let it go.
But if it, okay. I guess if it does run up in a very particular day, that my next roll will also have increased premiums because the chance that.
Correct.
Like, because it's a super green day.
Correct.
Yes. And that kind of shows the importance of like understanding all the Greeks. Again, Rho is based on treasury yield. So that one is less useful, although it could come into play. But the rest of them like helps you understand what options are going to appreciate or depreciate, how fast and why as well. So like, for instance, when I was first looking at stocks, I'm like, oh man, this premium on this strike was so awesome. This is great. This is just a good ticker to sell options on because I was chasing yield. I was being stupid. It's just because it was earnings week.
Yeah.
Very, very high IV. And as a result, the premium is extremely high. That can also change too. There's speculation that goes forward. Like they think earnings are going to be on this date. That gets moved. All of a sudden, the premium from the IV just plummets. Or if it's, shifted a little bit later, it increases a lot. It's as stocks, like I'm not going to go into the Greeks, but it is well worth your few hours of time if you're going to sell it just to understand at least the fundamentals. That way, you're not going to just be looking at it like, why did this option make this move? Because like that's one of the most painful things is when somebody is like, oh, going into earnings and they're like, all right, I'm going to go make a bet as far as their call option, and they're right, and the stock's going up, and they've lost money, and they're like, how in the world did that happen? It's because of IV.
And what Karan is saying right here on the screen makes a lot of sense. Given we're flat year to date on the S&P, it's not like 2024. Selling the volatility in between the flatness has been the name of the game. Like on SoFi hasn't really moved year to date, but you can sell $15 covered calls every month and get like 3-4% and like keep your shares and just use the shares to keep renting out, right?
Yeah. No, I think back to it. Like if I was doing this for years and years and years, like my NVIDIA like share price would be negative.
Yep. Your adjusted cost basis would be zero. Yeah. Now you would have to do it successfully, and you would have had to really successfully manage it in 2023 when it rocket shipped. But if you did, which is hard to do, and not a lot of people can. But if you were able to navigate somewhat of it, because then we got a massive drawdown in 2025. So like even if you like, one of my friends was underwater on Palantir for so long, but then finally Palantir gave him a little bit of dip, and then he got out of it because eventually stocks take a little bit of a breather, right?
Yeah. It's interesting. It's definitely it's going in the like the tools. Now I've got more conversation. I don't want to keep bothering you, but Roy, you and I will talk more about the Greeks. I've just always thought like I don't know. We'll talk about it later.
Yeah, we'll
It's
talk about
very-
it after. I think I mean those are mainly all the hood topics today. I don't think we have a lot of other crazy stuff to talk about. I guess the last topic here is Google I/O tomorrow.
Yep.
Any excitement for that from both of you?
I'll be streaming it.
I'll be sure.
Yeah.
So we'll listen to Google.
I'm shifting to a little bit more bearish on Google. Not bearish, still neutral, but leaning towards the bearish side of neutral. I don't know. They're not doing bad, but it feels like that ad revenue is going to slip away from them a little bit here and there, just a trickle, and then all at once. And that headline from last week where Apple came out and was like, hey, we've actually decreased, or we've seen a decreased use of Google as it relates to our Safari app. Of course, Google fired back and said, no, it's actually up across your whole platform. They conveniently didn't single out Safari specifically. I don't know. I've just seen a lot of weakness, a lot of shift, a lot of changes. We talked some about it last week as well. And that is like, they're doing a whole lot right on the other end, but that's such a significant part of their revenue. I just don't know. I'm actually rather tune into the Nebius earnings call.
I think you can do both.
I only have time for one tomorrow. It's a very busy day.
Yeah, but Google is in the middle of the day.
Yeah,
at 1 p.m.
I'm sleeping tomorrow, so.
Yeah, I think Sundar's got to save my damn calls for 2026. So
you got out of Google and then you got back in. Like what sold you on Google getting back in? Was it just
Nancy bought calls, so I followed Nancy in January. I was like, all right, cool,
bro.
So this will work, and they have 6 months to recover. So I mean, we'll see. But
I almost feel like Google's cheap. The valuation is attractive. They're again doing a lot of things right, but I feel like that the fear that's priced in that multiple is at least mostly justified. And I don't love that. Like there's a lot of uncertainty hanging over that one. And I would so much rather be in place where I feel very certain and very convicted in than be like, yeah, Google might be okay. I'm kind of neutral in it, but I'm going to buy because of valuation. I'm mature enough now as an investor that I'm not going to make those mistakes that I made in like 2021 and 2022.
To be fair, if Google goes to 200, will you be talking about your maturity as an investor or your ignorance to the fact that it's undervalued? Because all of us should have been buying it at 90 more aggressively, and we didn't, right?
I got him, so what do I care about Google?
That's true. You also have him.
I think someone said Google is the new PayPal. I think that PayPal's entire business was at a little bit of a concern. Or Venmo and Braintree were doing well, but like Super Core was not doing so great. Maybe that's a similar case here, but I think Google Cloud is phenomenally huge. YouTube, Waymo to an extent. They have so many, like some of the parts, this is still looking great. Okay. And I think that if people were to give OpenAI such a premium and give Google Gemini none of that, I just don't think that that's fair either. I think in the next agentic move, these sort of benefits to the AI plays will also benefit Google. They will be a part of that move. So I'm not selling Google right here, even though I was, one of the original bears to the AI play. I actually think they'll be fine.
Yeah, I agree. I think that they'll be fine, but I'm not investing for fine in an uncertain industry and space. And they're also still waiting on to see what that penalty is going to be like regarding potentially even divesting from the Apple platform. Save them some money on the front end, but I can guarantee Google is not giving them $20 billion just out of the kindness of their heart.
Yep, very true.
So it's hard for me because you're exactly right. Like there's 10 to 15% of their business, like they're doing very good things, very wise moves, but 85% of their business is not that. And it's tough. And I would rather not do tough right now.
Say that one more time about the 85% of their business.
Most of their business is centered around advertisement. They are iterating a little bit, but the biggest thing that I see them actually doing is just charging more for their ads. They're saying that there's a higher conversion now. They're talking about in the future, monetizing those AI synopses at the very
Overview.
top, Gemini as well. They're not there yet. And so in essence, the largest piece of their empire is under attack and seems like it's pretty vulnerable.
Do you think advertising is under attack?
Advertising, like it's search in general. Advertising is a part of that. We talked about the web pages stuff last week and the way that the internet traffic is changing. They're still involved in APIs. They are still, right there with some of the leading edge technology as far as the Model Context Protocol, MCP, although it's a little bit different for Google. But yes, advertising is going to look very different in 5 years. And it's just tough. It's kind of like with Gemini. They're in the innovator's dilemma where they're not monetizing Gemini yet. And so the better that Gemini does and the more people use it instead of search, the worse it is for Google. But if they do nothing with it, then the Perplexity, which is actually doing pretty incredible, or ChatGPT will just eat them alive. We saw a big deal with Grok today. And they're in the same place with the advertising business. It's really tough. And those are interrelated. And what I'm saying is that the other segment of the company, 10, 15% of the company is doing great. And if that doubles, that's awesome. But I think that we're going to be at the point where we start, other than them just charging more for those CPCs, the cost per click, we're actually going to start seeing their advertising revenue decrease within several quarters. I think it will be a very slow thing, not suddenly all at once. It's not going to be panic in the streets or anything beyond just the seasonality of quarter four, of course.
I think the consensus narrative is what Roy is saying, which is why I think it might go the opposite, because everyone's getting so bearish on Google. Like maybe it's just not that bad, right? Maybe it's not going to be that bad.
Definitely possible. Some strong language to say before a big keynote tomorrow.
Did you see the Sundar interview with Jason Friedberg? I mean, he sounded pretty confident about AI, and didn't really give an answer though to the question about search, but he like kind of,
With who?
Jason Friedberg on the All In podcast.
Oh, that guy?
Yeah, he did an interview with Sundar. You didn't see
Good interview
with Jason Friedberg.
Mm-hmm.
Yeah, dude.
That's an interesting guy. I've never heard of him.
Oh.
Wait, his name is David Friedberg? Oh, shit.
Yes.
David. Whatever, dude. The point is, Sundar is talking to people, and I think he's trying to get them to realize that, Google's legit. But it's cheap, bro. It as Roy said, it's cheap for a reason. And tomorrow, market's either going to determine it needs to stay cheap or it can finally break through that 170 wall that it has right now.
Sorry, I'm reading all the comments.
I have no thoughts on Nebus earnings, by the way. I don't own the stock. I know it's up 5% right now, but yeah, I have no thoughts.
Yeah, I'll say real quick on that. It's not really about the quarter. They're growing, like the year-over-year growth numbers are insane, but that's partly because they have a very small base. They're also managed quite well. My thesis is not a single quarter, so I don't really care about that. What I care about is basically them living up to their commitments as far as the build out and as far as what they're able to guide on. They're new enough, like you don't even know how they guide. Like, is it too aggressive? Are they sandbagging it? And just continued penetration, especially into the European market. But I'm too new in this. Like it may even just be a swing trade for me, to be honest. I've been holding the stock for like less than 2 weeks. So it's invest and investigate. I think that's Druckenmiller.
Yes. That's his quote. Why not CoreWeave?
Meh.
What I
really like about, I've had some bulls push back on me for this, and it's a very simplistic thesis. But initially, I was not interested in Nebius just because it's a European company that's mostly data center, and there's AI elements and stuff. But I mean, Amit, this, like how little there has been as far as AI penetration in Europe. That they're skeptical, they overregulate, they try to choke it out, and they're especially skeptical of the West coming in, big tech coming in, as they did in the past. That's one of the reasons why actually, like everywhere else, Palantir is growing like weeds, except for Europe. And so I was like, you know what? A European AI company, like, come on, it's a data center thing. But sure, they're actually growing there. Europe is begging for more capacity, begging. Of course, they're building in the United States just because, but the TAM is so immense. And it seems like they're positioned well to not only benefit from what they're currently doing, but also what they've alluded to as far as, from when they IPO'd and also what they've been building out recently and mentioning on earnings calls. There's one other interesting interview. I'm too new in it, but in essence, like, this company is not going to be the exact same. It's kind of like NVIDIA. It's not NVIDIA. They are using H100s, by the way. So this is good for NVIDIA. Just NVIDIA is so easy. But like NVIDIA, they will continue to transform their company, build out new capacity, go into new markets, new TAM. And for whatever reason, they seem like that they have the inroads to the European market. They're actually at some point going to have more revenue from the American side of it, I know. But that's what actually got me to be like, okay, I need to invest and now investigate. So I'm doing that.
Tanner,
Amit, what are your thoughts on CoreWeave?
I don't really have many thoughts. I listened to the CEO the other day, but you went long like a week ago, right?
No.
You don't own it?
No.
Why were you so excited then when it was spiking up in the earnings?
NVIDIA.
Oh, I thought you actually bought it.
No, NVIDIA holds them 7% stake. The only chip that they buy is in NVIDIA. So it's a proxy for me.
It looks like the GPU reselling and renting business is vast. Their CapEx is extraordinary, but that's because they have so much demand. I mean, it's up 30% in the past week and a half. Like, I feel like it's bullish NVIDIA, so I agree with you.
I mean, bro, the CapEx shocked me.
Yeah.
Shocked me.
3x the revenue. I mean,
4x or something.
Yeah.
Oh wait, you're talking about this quarter.
This quarter's, yeah.
Yeah.
It's 3.2 versus 987 on the top.
Yeah.
Line.
Yeah. But their full year, they're expected $5 billion in revenue, which I think that they'll blow through. Already, just based on the quarter that we saw, I think that they are going to be almost similar like a SoFi of like, hey, we're going to do $1 billion. And if they do $1 billion in revenue next quarter, this will sell off so hard. You're growing by 420% year over year. And then next quarter, you're like, we're going to do 15%. Yeah, right. Anyway. But that being said, full year revenue, $5 billion expected. CapEx, they said it's demand driven. We're only going to
everything. Yep.
But your CapEx is 20 to 23 billion. I know that you guys got a big revenue backlog, but that is crazy.
Yeah, that's a nice thing about this space right now, and it won't be this way perhaps in 2 or 3 years. Is the TAM is growing so rapidly, you pretty much don't have to worry about competition yet. You do in the future. There will be consolidation in the space at some point, but they're so far behind demand right now that there's going to be multiple winners in the space, a lot of winners. But the best thing, guys, is we're all NVIDIA shareholders, and this NVIDIA is basically a picks and shovels play for AI. Like, unless AI is suddenly not real. And I don't know many people that actually think that. Now, I even got asked by some. Well, I'll tell you guys after hours, but I got asked by somebody random something about AI, which was just like, it was just made me even more bullish for NVIDIA. But yeah, like, will CoreWeave win? Will Nebius do better? How about SMCI? All these other plays, it's like NVIDIA wins. And they're not competitors there. They're collaborators. I mean, there is competition, but.
Any thoughts about the NVIDIA fusion talk?
Bullish. Dude, if they can connect hyperscalers' chips to their chips symbiotically, simultaneously, I mean, like the sort of threat of Amazon's going to use their own chips over NVIDIA, that starts to go away.
Does it?
Well, that's my initial reaction. Maybe it doesn't, but if it does, that's not too bad.
I was mixed. I was thinking, okay, cool. They want to be a part of every sale, and NVIDIA for probably the last 18 months now has said, hey, the big thing that people are not pricing in right now is how big we're going to be in networking. I think that's exciting. In the next breath, does this give some real light to, like before, the way that Jensen was talking about custom silicon was, guys, this is not even making it out to production. Like, everyone's freaking out about this, but it's not real. Like, the threat is not real. now going to, hey, you don't need to just buy NVIDIA. You can use your own custom silicon. Is this kind of admitting the fact that it is very real and that there will be a mix between CPU, custom silicon, and NVIDIA GPUs? Thoughts on that?
I don't really know. I haven't thought about it that deeply, bro. I just thought about it from the perspective of that is the idea for
You're a
NVIDIA.
shareholder.
Yeah, but I mean, like, I don't even fully understand the integration of ASICs. But like, I got to do more research on that stuff. I think it's net bullish, even though yes, it might not be solving their commoditization problem necessarily. I think we didn't talk about the UAE stuff. That shit was bullish, bro.
That got me more excited, honestly.
2.5 million chips to the kingdom of Saudi Arabia for the next 3 years. Like, all this AI investment, all these data centers. I mean, like, dude, Trump went to the Middle East and he got Jensen a lot of money.
Yeah.
Crazy, man. It's crazy what a $400 million plane could buy. No, I'm kidding. But
That's a good point.
yeah, such an absolute win. And I think that everyone was mispricing international sales, like as if even India is going to be sitting on the sidelines with AI, or UAE, or even China. Even China, I don't think is out of the picture for NVIDIA sales. I know everyone goes, oh, we could slap a big fat zero on that. I don't think that'll be the case, but lots of sales all around the world. Yeah, it's also crazy. Every time I see the UAE, I'm like, these guys are just made of money.
Dude, I watched the documentary on the Saudis over the weekend because I got so excited about what happened in the Middle East. He has a net worth of 1.4 trillion. The prince, MBS. Like, Bezos and Elon don't have shit on the prince of Saudi Arabia. This dude, oil money is different.
Crazy.
But he knows it's going to run out soon, which is why he's trying to diversify his investments. But dude, he's got a lot of money.
Yeah. I feel like that's probably how China was back in the day whenever America came to be like, I'll take your planes and I'll take this and I'll take they just came over. They just shopped. They just bought all our stuff and now they're leaving. But it's great. I think that's fine. But
speaking of Abu Dhabi and the UAE, do you know which eVTOL, Tanner, got a deal for with the UAE specifically to launch the first commercial taxi flights and also help redesign the airport? And
I do.
Okay, yeah, it's not Joby.
No, it was Archer. Next topic.
Yeah. I want to be an Arab king, bro. Like, I need to get into that royal family, bro.
That would be a step down for you, though. Come on.
Any Saudi princes watch YouTube?
Oh, they definitely watch YouTube, bro. They have
Yeah.
to. No, I think that's it. I think we
send the plane for the Hood Weekly. We'll come out.
Dude, have you guys ever been on a private jet?
No.
Neither have I.
I thought you were going to say that you've been on one.
No, I didn't. One day, all three of us, bro, we got to get on a private jet.
Yeah. Me neither.
No, I haven't. I really haven't. So I would be excited one day to.
Okay, real quick. Speaking of
everybody's got choices.
Speaking of private jets, Clean Spark, they bought a private jet infamously. A lot of shareholders got mad about that. And I saw a question pop up a couple of times with Bitcoin spiking. Do you guys have any hope at all or interest at all in crypto miners, or it's just like, why would I be in that?
Legitimately, I think it's the worst investment ever of all time.
I think people have been brainwashed to assume the crypto miners are a crypto play.
Yeah.
And it's Robinhood, Coinbase, or MicroStrategy. Coinbase kind of sucks, to be honest. MicroStrategy, you're taking on a lot of risk. The answer is Robinhood. If you haven't figured that out yet and you're still doing Clean Spark,
I'm sure there's other names. There must be more.
Other names are there? What other names are there?
The Bitcoin ETF.
But that's one-to-one to Bitcoin.
No. There must be crypto names. There's got to be more public names than that.
There are out there.
Robinhood, and Coinbase.
Can I say Block?
No.
Don't disrespect any of the names I mentioned by mentioning.
You might as well say PayPal, like if you're going to say that. Come on, bro.
Yeah.
Or Semler Scientific or some stupid Color, some of these dumbass companies that want to replicate MicroStrategy. Like, there's only three options here. It's MSTR, Coinbase, or Robinhood. Now, on the miners, I think wheeling makes sense, right? Selling puts and calls against them and collecting the premium. But for someone buying CleanSpark, thinking it's actually going to Like Bitcoin has 4x and CleanSpark is still $8.
People in the chat
what are
are
we
just
talking about here, bro?
people in the chat are just posting miners as if they didn't hear what we said.
Marathon sucks, Hut sucks, Riot sucks, CleanSpark. And I don't mean they suck as, again, trading instruments, because I know people trade them and wield them. That's fine. But if you're buying them for alpha against Bitcoin, I don't understand what the thesis is, because they haven't performed at all.
Miners are literally not a business. Like I can't, like the way Bitcoin is designed, the hash rate is designed to make sure that there's zero alpha.
Yep.
Like it's designed to tear away your business. And then if on top of that, you have a halving every 4 months just to say F you to your business.
Wow. not every 4 months, but yeah, it's
sorry, 4 years. 4 years.
It's a deteriorating business, and that's why pretty much every single one of the miners, there's some exception, is chasing revenue in other businesses like data centers, like energy, and I'm sure some of them will probably make it. But honestly, for me, like, and I remember, I think that, well, we never had this kind of video format, but I was asked in 2023, and I think Tanner, it was with you. I don't know if it was with you, Amit, too, on like, okay, Robinhood or these crypto miners. I was like, Robinhood, like easy.
Dude, I had CleanSpark in January of 2024. I made like, I think 10%. I made $1,000. I sold it, and I was like, why am I not heavier in Robinhood? And that's when I really decided to solidify.
Oh yeah, yeah. Like long term, it's easy to see the trajectory of both. And the problem is too, like the time you want to buy the miners and load up on them, we will get another crypto winter. Maybe it'll be prolonged. The Bitcoin miners, like you think that they might be low now because they're not at all-time highs, and the market is, and Bitcoin's near there. They will be smashed to bits. There will be consolidation. There always is. And then when everybody has like, and their mother has given up on Bitcoin and the miners and crypto, that's when you load, if you want some risk. Call options, naked call options, put them far out there, make them leaps on the miners, and you usually do pretty well. Make sure you're okay with losing that money too, because it could go the other way. But yeah, they're not well-run businesses. I agree with you guys. I wouldn't quite go as far as you, Tanner, that they're like the worst period, but
what's worse?
DJT.
Okay. I mean, yeah. That's
I mean,
consider that a stock. That's like it's like a political donation ticker.
It's a stock. It is. It's a publicly traded stock.
But no, I agree with that. That's fine.
And you can still make money on both, but it's just like long term.
Yes,
that's hard.
That's the great thing about markets. You could still bet on sentiment. Like there are swings in sentiment that can make you make money. But like someone even said, "Oh, wait for quantum crypto mining to come out, and then everything." Even that, like, if there's 2 quantum miners, the hash rate will adjust. So then, unless the quantum's so strong that it just breaks the 256 security threshold. But let's say it doesn't. Okay, let's say it just bars underneath the threshold. They'll just split the daily reward every day. There's only a daily reward. You know, it's designed to be like just enough where you pay for your energy and you pay for your GPU capex that has to continuously increase and depreciate over time. It's just, there's zero operating leverage. Companies are designed to get operating leverage. The more customers you bring on, it should get better and better over time. It's why like fintech is such an easy business for me to understand, because like the more customers you have, the less you have to pay for the servers to host them. And then hopefully over time, the longer the customers stay on your platform, the more they spend, the more they save, the more they buy other products. It's like, that is business.
I just don't get how Bitcoin is 3x'd, 4x'd, and the miners are still flat. And there was a moment where the miners were running and you had to get out of them in that moment, but
you get why.
Well, yeah, if you look at the structural problems of their business, they have to sell more Bitcoin, they have to dilute, buying jets. Like,
yeah. I mean,
okay, well that stuff is,
But that's like, who are these people running these companies that they got to buy a jet? You know? How much more productive do they have with having a jet on their facilities? Like, it's.
But I heard some of these miners are turning into data centers.
Well, Iran, that's one of the, and that's actually a real bull case. But
Yeah.
CleanSpark and Riot and Marathon, the main ones, they're not doing that. But Iren, I think, is doing it. So
I think that the ones that will survive, and this is talking about a couple cycles out, not just like this next winter, because some will die, some will live, but there will be more consolidation, are going to be the ones that basically shift kind of in the direction of block. Not exactly, but I'm basically saying that the mining is actually a very small part of their business that they were founded on, but they discover other aspects of their business instead. And of course, Block has some exposure to crypto mining that it's weird, but yeah.
I also think, like, just to clear my point here, I'm actually not anti Bitcoin mining. I think that, like, especially for like for a lot of those energy companies as well, whenever they have a abundance of energy that would essentially go to nowhere, it's a way of like spending your excess energy and monetizing it. Like, I think there is awesome use cases to not only Bitcoin, but Bitcoin mining. But like as a standalone sole pure play, they are designed to weaken every 4 years, mathematically.
Yeah, agreed. I think Hood is dude. I just buy more Hood. I think Hood is the easiest way to get access to crypto.
I think a lot of people are realizing that. I think that's why they're getting a premium.
Or just buy the coin itself, which I know you'll make less. That's not why I'm buying the Bitcoin. It's really more of a hedge. And I've actually shifted away from some precious metals and just put that into Bitcoin. And I've got the only two things that I'm DCAing in that I've been doing this year are NVIDIA and Bitcoin.
That's fair. That is fair. All right, folks. I think that's it for us. We'll be back next week.
Thanks for having me.
Yeah, Google. What do you mean? Thanks for having me. This is your show as well.
You guys are welcome to be on my show.
Will we? Next week's Memorial Day. Will we? I don't think we have an episode next week.
Guys, look at the Canada holiday.
You don't have
schedule. It's a holiday today for me.
Wait, what's the
non-working day?
What's your holiday?
That's Canada.
Victoria Day.
That sounds made up.
We celebrate a queen.
Oh.
We celebrate Queen Victoria.
I thought you were celebrating bikinis or Victoria's Secret or something. I was like, what is
No.
Victoria Day. It's a queen in Canada?
Yeah.
Queen Victoria? You've not heard of Queen Victoria?
I heard of the British Queen.
Yeah, that's her.
That's her. We were ran by them for a while.
We tried to make Canada the 51st state twice. Well, this is the third time. Didn't work.
So how'd you celebrate the day?
I didn't.
But is all corporations have the day off?
Yeah. Yeah. Well, I think like aside from like McDonald's or whatever companies want to stay open, but like for the most part, you're not going and getting your groceries today. But like, we do this all the time just to give days off. Like, I mean, what is Labor Day? Like, isn't it just a day off?
Yeah, pretty much.
Basically.
That's fair. All right.
Well, Roy, time for a history lesson. Yeah, go ahead.
I'm trying to refrain and avoid.
You know more about Victoria Day than I do, for sure.
All right. Well, happy Victoria Day to all the
God save the Queen.
Yeah.
All right. That's it. Thank everybody for being here. Larry, I think we have a quick super chat. Thank you for the $10. How long did it take you guys to go from 0 to 20K? So Roy's from 0 to 4, and it's been like 5 months, which is incredible. It took me about 2 years, and I think it took Tanner basically 2.5 years, 2 years, same time.
Yeah,
so
something like that.
Yeah,
it's mainly gone like this. Like it took me so long to get 1,000 subscribers, and now it's like I don't know, like 10 days or like something like I don't know.
Well, momentum,
like 2 days.
Momentum builds momentum always.
Yeah.
In anything in life. It's with startups, right? And with public companies when they really hit their growth curve. Same thing with YouTube or growing a brand. It's like once you hit some momentum, you got to be consistent and keep going.
Yeah.
My momentum was you guys, and that first interview with you, Tanner, really accelerated me. But even before, I created the channel, had no videos, and it's like, hey, you guys should subscribe to Roy's channel. And I had like 150 or 200 subscribers before my first video. Like, what is that? So thank you guys.
Well, you did a lot of pre-work, like coming on to shows. Like it's not like it wasn't deserved, man. You put in like you make great videos and you're really well educated, and I don't know.
Yeah, anyone can get some initial following, but then to keep it, to maintain it, to engage them. And Roy is I love just listening to his videos. It's just like a calming voice. Like it's hard to do. And so that's what really accelerates growth over the long term.
Thank you guys.
All right. Thank you, everybody. We'll be back next Monday. See you guys.
Bye.